Hi. Okay, so you're trying to find out how to draw the trend lines in the most effective way. Let me show you. Now in this chart, what we're looking at, I'm using TradingView as my charting platform. What I'm going to do is I'm going to use this trendline tool here. And one thing I like to do with the trendline tool, let me just draw it here. I'm going to right click it, go to settings. And one thing that I like to do with the style, I'd like to have the extend right line option on. So what that does is, you see here, that's where I drew it until, but if I turn this on, it sort of projects it into the future. This helps me with knowing where my trend lines can respond from. Okay, now let's take a look at this. And in this downward market, where you want to draw trend lines is you want to take the tops of certain areas, of certain swings that happen, and you want to connect them to the next swing. Now, a question might come in your mind is, well, how do I know what swing do I need to draw it from? If I draw it from this swing, then this thing doesn't connect. But if I draw it from that swing, then this doesn't connect, that doesn't connect, that doesn't connect. That throws me off my game, right? Okay, so these are great questions. So what we want to understand from this is trend lines, they act like a moving support and resistance for you. Let me explain. If I draw my line from here and I connect these areas, I'm going to give you a tip. The way to draw these trend lines is wherever you connect the pivots, okay, you want to make sure you connect them to areas where they sharply move away to make new lows. Okay, they sharply move away to make new lows. These are the ways you have to connect them. Now, in this case, we have a trend line connected here. It looks a sharper angle. It means this is the more immediate term trend that's going on. Now there's immediate, there's moderate, and there's long term. Okay, so having that said, notice how once it touches the line, how long does it take to make a brand new low? Okay, you see that distance? Okay. Once it touches the line, how long does it take to make a brand new low? What happens when price goes out of the other side of the trend line? For example, here. How long does it take to make a brand new low? Okay, this is where a trend line comes in handy. It's basically the trend line, the immediate trend has been broken and it's now moving towards a more intermediate trend. It would be something on the basis of something like this, right? Because we're trying to connect this thing because it moves strongly and makes a new low. So now, if this intermediate trend breaks, notice how long it takes for the market to get back into its rhythm again. Okay? Now, let's move on to looking at this in an up market. Okay, here we are, we're looking at an uptrend here. So how do we connect our trend lines from here? Using the same knowledge that you've understood, we want to connect the sharp moving pieces that create new highs and connect them. Okay, I can move it to there. Okay, in fact, let's use this as, because if we see this, it doesn't really make a new high, right? So I'm not going to use that. I'm going to use the one here. Okay, this area starts to jump up. This area starts to jump up. So I've got my connecting points. Okay. Now, these are the normal momentums of, well, how long does it take to make a new high once these things get adhered to? But notice here, it breaks. But once it breaks, does it go down? No. It just shifts onto from an immediate term to a more intermediate term. Okay, this is very important to know because the absence of sunshine doesn't automatically equal a thunderstorm. You have to understand that. So just because a trend line has been broken, it doesn't immediately mean it's going to go down. It can shift from a quick decision making to a slow decision making process in the buying in this particular case. Okay, so having that said, now the angle has shifted to there. Okay, whether you draw it like that or if you want to draw it in that sequence, you can. Okay, you can see it wonderfully connects to this one, but this is not a one we are interested in. We are more interested in this one. Aggressive move away that can make a new high. Aggressive move away that can make a new high. Now notice how this becomes an intermediate trend where prices don't even come back to it until much later And when they fail through this area, we've moved on to a much larger scheme. So things can happen in reverse as well, where a trend that was slowing down can actually accelerate. It can actually accelerate where you would be like, he never came down to this area. In fact, from here, he accelerated even sharper there. Notice the same logic of, well, how long does it take to make a new high after touching the area? After touching the area, how long does it take to make a new high? After touching the area, how long does it take to make a new high? Here, it breaks through, makes a slight higher high, and then it's over. Now notice how long it takes from that moment to make a new high. See, the intermediate aggressive trend line has been broken, telling you things are going to slow down, things are going to take longer. Now the fascinating thing about trend lines is to wonder, why do they happen? And more importantly, if I was to give you an example, are you going to be able to do it? Let's find out. Hi, I'm Naveen Prithiani, and thanks for tuning into urbanforex.com. Now, we're going over trend lines and why do they happen and why are they so sought after in our industry? How can they help you? And more importantly, how can you do it more efficiently? So let's dive deeper into it, shall we? A trend line, when it connects from an angle, let's say in a downward angle, what it's basically saying is whoever was selling the stock, in this case, let's call it a stock or currency or product, okay? Whoever was selling the item is not getting enough buyers, so he's forced to sell it at a worse price. He's forced to sell it at a worse price. When a store is willing to give the same product for even a worse price and a worse price and a worse price, the buyers tend to pick up on this and they're able to project, sort of like a business projection, how they have a forecast of what are we expecting in Q3 or Q4, or how the economy predicts of, well, in the next 2 years we're going to see inflation or recession or a growth. The same thing happens. This is a forecasting model that says, I believe we are due for another price drop from approximately that area. Remember, a trend line is nothing but a forecast. It is not a perfection, and it shouldn't be taken as I have to make sure I do my trade from there. It is simply a forecast. Now, in an uptrend, it's the opposite. You have to think of it, all the layers that are connected are nothing but buyer intentions. Okay? So as the stock is more and more in demand, whenever the stock comes in for a better rate, people tend to pay more than what they originally paid. You see, if this is $10, they're now willing to pay $20. Okay? Now this forecasts up into the person who's selling the stock, understanding that, I can forecast that they will most likely, if I give a better rate again, they will buy it up here again. This causes the seller to slow down in giving a better rate in that area, causing the price to self-fulfill itself and the buying to come in again. Now remember, again, this is nothing but a forecast, and when the forecast is broken, it doesn't automatically mean the buying has collapsed. It just means that speed of that forecast has shifted. Okay? So it's very important to understand that. Now let's find out if you are able to do this. Now looking at this chart here, in this downward flow, where would you connect these things? If you were to start from up here, where a strong downward move happened, making new lows from these areas, where would you connect the next piece? Let's say the immediate trend. Where would you connect them from? Would you connect it to here? Or would you connect it to there or there? 1, 2, or 3? If you said 1, that is correct. Okay, what that is you are connecting your line from here to there. Let me draw it a little bit better for you. Okay, there we go. This is the immediate term trend. Notice how quickly, once it gets to that area, how soon till it makes a new low. Once that thing gets broken, notice how long it takes after to make a new low. It takes longer, doesn't it? Now, if you were to do a more moderate size trend line, where would you draw it from? Would you say, I can connect it from here to there? Is that one? Or would you say, there? Is that one? Okay, or there? Is that one? 1, 2, or 3? Well, the definite answer is no to 1. Whether you choose 2 or 3 because of the aggression it's trying to break support levels, 2 or 3 is correct. Okay, you can connect them to those and have a more immediate term, medium term look of where things are going. Okay, notice when this thing breaks, how long will it take until they come back versus how long did it take when they did it this time? Okay, if this is the lowest point, once it touched that trend line, how long does it take to make a new low? Okay, and then a longer term would be if anything makes a new low below this, that would be a longer term. So I really hope you now understand the basis and why trend lines are there, and more importantly, how you can use them to forecast into the future of where prices may react. If you find this video useful, please hit the like and subscribe, and I'll see you in the next one. Cheers.